Well, today's CPI number just came in, and it is...
The numbers, please. And here they are, our consumer price index for the month of April. Headline, expected up 0.2 is up 0.3. And do remember, this is a big drop from up 1.2 last month, which was the highest since 2005. If you strip out the all-important food and energy, expected up 0.4, a bit more, up 0.6. The high water mark here is up 0.9, and that was in April of last year, and that went back to 1981. And the money ball, year-over-year headline, up 8.3%. It breaks the streak of 7 higher year-over-years in a row, because in the rearview mirror, we have 8.5%. And of course, 8.5% takes us back 4 decades. It is a small reprieve, but a reprieve nonetheless. And if we look at core ex-food and energy year over year, same dynamic. It's higher than the 6% expected, Joe. It was up 6.2. 6.5 in the rearview mirror is the highest since 82. So we've definitely moderated just a bit. We see interest rates, well, they have changed rather dramatically. Rates across the board pretty much, and especially the long maturities, have moved higher from down 5 to up 4 or 5, over 3% again on a 10-year.
Pretty bad, huh? Well, what we're going to do now is we're going to dig into these numbers to see how that should affect the market, especially the stock market, the real estate market, and interest rates. Because on this channel, my goal is to educate and inform you guys everything real estate, especially when it comes to the financing options. So let's start digging into the news. But first, where are rates at right now? So here's where rates ended last night. They have not opened yet. All the banks have not issued their rate sheets. So let's go over where rates ended last night, but these numbers are going to be up, and they might be up pretty big this morning. So this is a rate sheet that's issued by Mortgage News Daily, who does a survey of mortgage lenders all over the country to see where are mortgage rates. So this is the blended average of mortgage rates throughout lenders throughout the country. So let's go. The 30-year fixed rates coming in at 5.4. It was down 0.12, so it was down an eighth. And it comes with a cost. That cost is right here. How do you figure out how much this would cost you to get this rate? Okay, so what you do is you take your loan amount. In this case, we're going to say it's $100,000. We're going to multiply it. And then what we're going to do is with this, where it says points, we're going to use a percentage sign. So we're going to take the 100,000, which is our loan amount, times 0.4, hit the percentage sign, and then hit equal. And that's how much it would cost you to get this rate with paying points. So we go across here. Some of them pay points, some of them don't. I don't know why Mortgage News Daily does this, but it does it. So the 15-year fixed was down 0.04, just a little bit, to 4.78, coming in with points as well. The government loans, which they only post an FHA rate, but I'm going to lump these into government sponsored loans, which is FHA, VA, and USDA. It was down also an eighth, 0.12. Coming in at 5. No cost there. The 30-year jumbo is 4.62, down 13 basis points. No cost there. And the 5/1 ARM was down just a little bit, down 0.05, coming in at 4.6. Headline news is saying a lot of people are starting to elect adjustable rates. So if you're not on that bandwagon, I would highly suggest you just learn what adjustable rates are today versus where they used to be. All right, so we go down through here and we see the chart for the 10-year chart. Where are rates? Well, they're the highest level that we've ever seen on this chart. The sentiment for today is really bad, completely negative, almost all the way off the charts over here to the right. So what's going on with the MBS market right now? Well, the news came out about the CPI number, inflation, and the market's crumbled. But I can see that once people start digging into these numbers, which I'll show you here in a minute, I think we're going to see some reprieve, or a little bit of reprieve. So let's update this real quick, because this doesn't update live. It is coming back a little bit, but that's still going to say rates are probably going to go up at least an eighth to maybe 0.2 that we're going to see at the opening. So we'll check that out there. Okay, so what this is, this number right here, this is what we follow to basically follow the trends of what rates are going to do, mortgage rates. What this number is this is what's going on to the price of a mortgage-backed security bond that trades on Wall Street. That bond's yield is the biggest component of your mortgage rate. Okay. So what we follow here is what's going on with the price of that bond, because when the price goes down, the yield or your mortgage rate goes up. Okay. 0.33 is a pretty big move normally. In today's world, we see these changing at 50, 60, 80, 90 points, the 0.9, right here. So 0.33 is bad, but in today's world, it's not as bad as I've seen in the last couple months. So again, you're probably going to see rates go up at least an eighth to maybe 0.2 once rate sheets get published for today. So let's go into the news for those that want to stick around to see what news is coming out. So the headline news that we see here is inflation barrels ahead at 8.3% in April from a year ago, nearing a 40-year high. All right, so we know inflation's going up. One of the biggest things is we knew that oil prices, because of the Russia-Ukraine invasion a couple months ago, those numbers were getting pushed off till about this time. So you're going to see a lot of oil and fuel prices because of this really skyrocketing. They weren't in last month's report. They're built into this. So I was expecting a hot number here, not this hot, but there is some reprieve here. Let's go through just one headline that I saw. The good news is Pharrell Williams on the he sits on the Federal Reserve board, and he's okay with 50 basis points rate hikes from the Federal Reserve over the next two meetings. At least it gives us clarity, because after the Fed meeting, what's been happening is you have people that sit on the Federal Reserve board coming out and saying, I think we should have did more and we this and that. So it basically contradicts what they did. So, but let's dig into the report. So this is actually the report from the U.S. Department of Labor going over the inflation numbers. Now, we just went over all the headlines. Those are here. But let's dig down into the nitty-gritty details to see what's going on. So we go across here, and this is going to give us where we are for the 12 months on this side right here. You can see where I highlighted. These areas are crazy. Look at, fuel oil up 80% year over year. It's almost doubled. Okay. Why or how does that play a major role in all of this? Well, just think about it. You have fuel that basically powers everything in today's world. Even with the push of the green movement, we still have fuel, especially diesel. Diesel fuel basically gets all of our, just say, food from the producer to the grocery store. Okay. Also, diesel keeps that truck cool when you're sending perishable items. So diesel fuel, and fuel is huge item in regards to the cost of what we pay at the pump and what we pay at the grocery store and what we pay everywhere. So let's start digging down into these areas. As I mentioned, fuel prices are up 80% year over year, and we can go down through here. Basically, energy all the way across the board is getting hammered. Okay. And then you go down here in cars. Okay, those are mostly the biggest areas, and then we can put utilities here, up 27%. But let's focus in on, and then you have shelter down here, and we all know it's house prices are going up and interest rates are going up. But look at this, your gas price is almost doubled. So let's focus in on some of these areas. Let's go and see where we were and where are we. So let's just go and look at a trend of some of these areas throughout February, March, April, or you can go back as far as you want. Let's look at some April comparisons from the previous month. So we go all items. Well, March 20 of 22, it was up 1.2. Now we're up 0.3. So that's going down. We go to the next item. Food was up 1. Now it's up 0.9. Going down. You can see, I won't go line item by line item, but we got 1.5 here going down to 1. 0.3 going up to 6, so that almost doubled, but that's food away from home. People are going out more. We were expecting. Now we start seeing some of these. Energy, March up 11, April down 2. Are we cooling? Let's go to the next one. Was up 18, now down 5. Was up 18, now down 6. Was up 22, now up only 2.7. Then we go down in this area. We have right here, used car prices. Was down 3.8, down 0.4. It's still going down. Okay, that's what we like in this area here. And then new car prices, because they are available and people are starting to get to the point they need a car, it's up. but you can see the trajectory on a lot of these are going down, okay, in some of these major areas that are of concern. So that is giving me some hope. So that's where we are today on your news and where we are with mortgage rates for the day. My name is Dan Frio. I do the rate update on a daily basis to make sure you're informed and educated, everything financial, especially real estate, especially when it comes to your financing options. One of the biggest things that we have questions on today is investment properties. There's still a lot of people buying investment properties. So I'm going to do a video this afternoon explaining the differences between the different programs in regards to buying a rental property. So that's it for this morning. God bless, guys. Keep the faith. And I'll see you later this afternoon with a live report once all the banks started uploading their rate sheets. So I'll see you then. Take care. Thanks for watching.